Hello, you're watching Commodities Corner with me, Thomas Taplin. Gold and silver mines are experiencing a difficult time at the moment as metals prices continue to fall steadily. How is this affecting the commodities market, trading environment, and will 2014 prove another tough year for gold bugs? Well, joining me on the line is Nik Kalsi, Head of Investment Analysis at the Gold and Silver Club of London. Nik, you've just come off the back of a bank holiday in the UK. What was facing you as you came into work today in the precious metals market?
Starting this week, we've just we had a election in Ukraine, which has been really closely followed by commodity traders in terms of the recent tension between Russia and Ukraine. That's really been supportive for gold, silver, and the commodity markets as of recent. I think a real key event or key scenario looking forward is really going to be the relationship between Russia and the newly elected Ukraine president, Petro Poroshenko. Poroshenko, he's not pro-Russian, which could divide Ukraine even more than it currently is right now. So I think that's one of the situations that a lot of commodity traders are looking at.
So these developments in Europe are more important right now for commodities analysts than the Fed's comments in the US, that it sees no risk of inflation by continuing to provide the economy with quantitative easing.
I think that's a key event. Just looking over to the US, there's a lot of uncertainty just coming off the back of the recent FOMC minutes. The Fed, they're talking about obviously ending their asset purchasing plan this year by October, but based on the recent minutes, they don't seem to have a clear plan on how they're going to do that. They're using a lot of language such as an experimental approach. And when hearing language like that, I think it just makes investors and traders, just generally the market, very uncertain about what's really going to happen when the Fed get to this stage.
Okay, so you would say then that right now, what's going on closer to Europe between Russia and Ukraine is more important for precious metals than what the Fed is saying?
I think America definitely plays a key role in commodity prices, but then we can't really ignore what's happening in Eastern Europe, and then also what's happened recently with the election of a new government within India as well. I think that's really stealing a lot of the limelight as well when it comes to precious metal prices. India has historically been the world's number one consumer of gold prices up until last year when China took over based on the previous government imposing tax on imports. Now with the new Prime Minister, Narendra Modi, he's already begun to introduce measures to ease and eventually remove import restrictions on gold. So I think in the short to mid-term, that's going to be a very very bullish impact on the precious metal prices, especially as we move towards September, October, when it's the festival season within India. Gold consumption tends to rise during this period. In previous years, we've seen it increase by 25%. So I think that's really key right now. So India, Eastern European, and also, of course, America as well. They're the three economies that are definitely in focus right now.
Okay, looking ahead, what's going to happen now to the benchmark for gold prices after the Barclays fixing scandal? I mean, could we see stricter regulation, do you think, or will they let it slide?
I think that's it's a very interesting subject. There's obviously a lot of scrutiny around what's happened with the London gold fix, and also there's a number of banks being investigated for obviously manipulating prices. I think what we'll see is this will just open up a lot more transparency. I think it creates a case for transparency within the way gold is trading. there's been reports coming out today that China wants to set up their own global gold exchange within Shanghai to challenge London and also New York as well. There's already banks like HSBC, ANZ, Standard Bank who have agreed to use exchange, which I think is overall encouraging. I think if there is a new exchange set up in Shanghai, then it just creates an even playing field. This will definitely bring in new and existing customers into the market, and I think that could really change the landscape.
Thank you for joining me for today's Commodities Corner. Nik, the programme will return on Thursday, so everyone don't forget to stay up to date by clicking back to our homepage for further comment and analysis. Bye-bye for now.